But the real issue for me on ETH is, I ask this question all the time of people, if ETH didn't exist and it was invented today, would anybody use it? If you look at the futures-based ETF products in the traditional world, they're just wealth destroyers, right? Because they have this roll yield problem where you roll down the time curve and you lose money. Everything was demanded to play in the spot market, and new capital comes in, number go up. It's not the best product or technology that wins. It's the one that gets critical mass first.
Mark Yusko begins by posing a challenging question. If Ethereum didn't exist and was invented today, would anyone use it? This question is crucial because, despite Ethereum's first mover advantage and extensive developer base, there are now faster, cheaper, and potentially better alternatives. Yusko acknowledges Ethereum's significant installed base and developer activity, but also highlights the growing appeal of networks like Solana. Solana offers a superior user experience for certain applications, such as moving stablecoins, which is faster, cheaper, and easier compared to Ethereum. Yusko explains how the price of gold remains stable despite increasing demand due to market manipulation by big players. These players exploit the paper markets, creating artificial commodities similar to fiat currency. This manipulation keeps prices in check, despite underlying demand, and Yusko implies that similar dynamics could affect the cryptocurrency markets as they mature. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But the real issue for me on ETH is, I ask this question all the time of people, if ETH didn't exist and it was invented today, would anybody use it? And I think that's a hard question to answer because you have things that are better, faster, cheaper. And the argument for ETH, which is a strong one, is, well, it was first and has the most developer activity and the most installed base, and therefore it got critical mass first, so it won. So, but I listen to the Solana people, and I think Solana as a network still has a lot of flaws, bugs, but the TVL has gone back up and the price has gone back up, and you can. So the experience of moving a stablecoin over Solana versus over Ethereum, way better. Just way better, right? It's cheaper, it's faster, it's easier. If you look at the futures-based ETF products in the traditional world, they're just wealth destroyers, right? Because they have this roll yield problem where you roll down the time curve and you lose money. And so they just constantly chew up your gain. And literally they destroy 99% over a long period of time. Now, as a trading tool, they're great and you can use them for hedging and all this stuff, but futures-based products have this roll yield problem. Well, the flip side of that is if I go long the future and I go short the underlying, I can capture that spread and I can do that over and over and over again and basically make free money. Now you have to have money to make money.
Funny how that works.
But think about gold. That's why gold prices have been so stable for so long, despite the increasing demand for gold. The price doesn't move because these spoofers are out there, clipping coupons. The answer is yes and no. Yes, we should be excited that the largest manager in the world kind of gets the joke and that they have a product that is increasing the demand for the asset that we all know and love. The no is not all of their demand is real, meaning it's not all for spot. It's much of it is in the futures market. And look, I talked about this. I think you and I talked about this right before the launch of the Bitcoin ETFs. Very unreported, under-discussed on January 10th was a release of a number of new futures contracts on the CME. And I warned people that that was going to put material downward pressure. And it goes back to a quote from Leo Melamed, who's the head of the CME, from I think 2017 or 18, where he said, "We'll tame Bitcoin." And tame is a very intentional word. And this whole thought that the creation of ETFs and the creation of new products around the asset are only going to be number go up is ludicrous, because what happens is if everything was demanded to play in the spot market and new capital comes in, number go up. But that's not the way it works in a futures based market. And when in the old days, if I had oil to sell to you, I actually had to have the oil to deliver to you, right? Because that was the way it worked. I sold you oil, I pumped it out of the ground, and I put it on a truck and I sent it to you. Now I don't have to do that. I can write a contract that says, yeah, I'm selling you this paper oil. And if we settle up the contract before the delivery date, I don't ever have to get any oil. So you create out of thin air by fiat, it's just like fiat currency, you create artificial commodities. And so you've seen it in agricultural commodities or metals or oil, where you get these weird dynamics around the big money players manipulating, and I'll use that term intentionally because they've been fined billions and billions of dollars for that manipulation. But as JP Morgan said, they got fined $1 billion. And they're like, yeah, fine, but we made 20 bill. So it's like 5%, it's cost doing business.
Yusko discusses the January 10th release of new futures contracts on the CME, which he warned would put material downward pressure on Bitcoin prices. This manipulation through futures markets creates a situation where the actual demand for physical Bitcoin isn't accurately reflected in its price. Instead, the futures market, with its ability to create contracts without the underlying asset, influences the market significantly. Yusko explains that institutions are not merely buying and holding Bitcoin. They are engaging in sophisticated trading strategies, exploiting market inefficiencies across exchanges and blockchains. This rapid-fire trading and arbitrage keep the market liquid and efficient, but also obscure the true nature of institutional holdings and demand.
Paul Romer, famous professor who won the Nobel Prize 5-6 years ago for something called the law of increasing returns. And it basically says it's not the best product or technology that wins, it's the one that gets critical mass first. And so this is, I love to quote Top Gun because it's my favorite movie, and Top Gun Maverick is even better than Top Gun. But the original Top Gun has this great line, right, where he says, this school is all about combat. There are no points for second place. And so it's kind of like that with the ETFs. It go big or go home, be first or don't. And it doesn't mean that they won't gather some assets and $1 billion here, $1 billion there. It's real money. But I think maybe the BlackRock gets some because they've done a good job educating a few of their clients that they should have a diversified portfolio. Fine. And maybe a couple of the guys with the low fee will pick up some, but I just don't think there's going to be the same demand. So that's just on the supply demand dynamics of ETFs. First wins, first mover.
Especially
and yes, they're different, but they play the same role in a portfolio. Yes, they're different technologically, and yes, they're different as blockchains. Yeah, and it's incomprehensible given how people talked about this before they were approved, right? That these were going to be speculative, flash in the pan, not interesting to institutional investors. And I think quite the opposite. Basically what you've created. And so those numbers are a little fuzzy. It's like, millennium, right? Oh, we have, 2 billion of Bitcoin ETFs. Well, kinda. On that day, the net long position might have been 2 billion, but they don't have to report their shorts. So you don't really know how much they're short other stuff. And so I think what's happened is you've created a highly liquid, very efficient trading tool that very large institutional traders like Citadel, right, which is quietly, I think, scalping in these markets like they scalp every other market because they're geniuses. I think that's the misunderstood part of the story, is that it's not that the institutions are buying and hodling. They're rapid fire trading and scalping little pieces between exchanges, across blockchains.
Arbitrage and cash and carry in a way that they couldn't do it before. So even if we see these huge inflows, there's a position on the other side.
Yeah. And well, the thing that's
not moving massively.
The spoofing problem is real, right? Which is there is I can't remember, I think it's like 10% annualized difference between the spot price and the future price. I think the difference is, for most of the biggest dogs, right? So, this is the wolf of all streets. So if you go down all the streets and the back alleys, right?
You find BlackRock.
Yeah.
At the end of all of
them. Yeah. And you look at all the different types of buyers, the individuals probably will migrate here because they believe, particularly if they're listening to Raul and others, that ETH has more upside than Bitcoin. So, okay, fine. I mean, mathematically, that's true. I can poke some holes in that, and people are going to do a good job poking holes in that the next 3 days when we're in Nashville. So, but as you start moving up the value chain of larger purchasers, I just think if I'm a big institution, a big sovereign wealth fund or a big pension or an endowment, and I've had to go to my board and convince them that this crypto stuff isn't for drug dealers and criminals, and that it's really an institutional quality investment. I don't know if I want to go through the whole story again and convince them that, oh yeah, Ethereum it's kind of like Bitcoin, but not quite, and it's about a quarter the size or half or a third the size, and so I should have 3/4 Bitcoin and 1/4 Ethereum. I don't know. I'm going to take the under on how many people are willing to go through the brain damage.
Yusko is skeptical about their long-term success compared to Bitcoin ETF. He believes that the first mover advantage and the critical mass achieved by Bitcoin ETF will be hard to replicate. While some demand for Ethereum ETF might exist, especially from investors seeking diversification, it's unlikely to match the enthusiasm seen for Bitcoin. This is partly due to the additional complexity of explaining Ethereum to institutional investors who are already wary of the broader crypto narrative. Yusko highlights the reluctance of large institutions to delve into Ethereum after having just accepted Bitcoin. Convincing boards and decision-makers about Bitcoin's legitimacy is challenging enough without introducing the nuances of Ethereum. Institutions might not be willing to undergo the additional effort and brain damage to advocate for Ethereum, which remains less well understood and accepted compared to Bitcoin. Please like and subscribe my channel.